right. So we did this yesterday on the Sunday webinar, so I'm not going to spend too much time on it. Even though some of you weren't there yesterday, but kind of just go quickly and rewind to where we are right now, and this way everybody gets a pretty good feel of where we're at. All right, so going into last week, you had in this type of market on either side, but even more so the long side. Obviously, it's a bear market. There's no easy trade, right? We talk about that continuously. But what we did have going into last week, you had a lot of things line up for the possibility of a shift in momentum. Okay. You had sentiment, of course, extremely washed out. No, especially institutionally, nobody owns equities. Nobody has an interest in equities. You had end of the month buying that was likely going to come into play, and we all know everything gets front run these days, so it's not going to come at the end of the month. Usually comes a week before. A lot of the professionals front running it, as we saw. All right, and there were other things. You had the buyback, dark period, black period, whatever they call it. People coming out of that quiet period for buyback, so they can buy back their stock. So a lot of factors. In other words, a market that has significantly lacked buyers. There was the potential for buyers to show up and possibly get the momentum going, create a short squeeze, right? We got it back here, right? And we got it here now. So that's exactly what this thing has been. Has checked off all the boxes to be nothing beyond that. Okay. The flow into this has, I don't know if I should use the word suck, but squeeze flow. Okay. You don't have players sizing up, accumulating positions in new potential leaders of a new bull trend. Okay. You have a lot of the crap, like somebody just mentioned, Carvana catching weekly and front month action, EV stocks, the electrical vehicle plays, all the highly shorted names, all the crap, right? All the crap, and some mega cap tech, which also caught a nice beating of recently. So there's been some flow there as well, playing a bounce though, playing a bounce. So everything in short-term strikes, and pretty obvious that the players placing these orders were either speculating on a bounce, right? Buying calls, looking for quick upside, or shorts that are hedging, protecting a short position, okay, against the bounce. And I think people are, again, people got to understand, this is not a bull market, all right? And I know I'm stating the obvious here, but you can't look at things the same exact way as you would look at them in a bull market, right? Yeah, of course, when we were in a period where everything was going up every day and option players were tripping over themselves to own weekly calls across the board, because again, you're looking to take advantage of that momentum to the upside, you're bullish, okay? That's a lot different than somebody, an institution, a hedge fund, or a big player who is or has been significantly short Carvana and senses the same thing we were sensing last week. All right, there's some signs out there that there's the possibility of a bear market rally, a bounce coming. We own a shitload of Carvana on the short side, profitable position. We don't want to lock that in. Again, I'm giving hypothetically here, right? We don't want to lock that profit in. We want to stay short Carvana. So what are we going to do? We're going to buy some calls and protect against the upside, right? And we're not going to go out 6 months and buy those calls. We're going to play it week by week and see, how much juice this squeeze may have, or even if it shows up, may not even show up. and weeklies are dirt cheap, right? So it's a quick, easy, and very efficient short hedge. Okay. So a lot of people are seeing these really cheap call buyers and the contract size. Okay. And that's why I think people get the misconception like it's some size player coming in. The contract size is not bad. Okay. Especially when they start to tally them up. You'll see like, 10 to 20,000 contracts on a weekly line in some of these things, but they're dirt cheap. They're paying 30, 40 cents, or even a name like Carvana, $1. That's cheap. Okay. They're not dishing out premium. That's peanuts, right? Let's say the whole entire volume tallies up to $1 million. That's peanut money for player institutions that may be short Carvana in a big way and looking to hedge the upside. All right. And on that note, that's exactly what we've been seeing in almost all these names continuously, right? Once in a blue moon, we see an order that has a real look to it. Like it may not be a short hedge, right? Short protection. And we're looking for that buyer to come back and start accumulating position. They never come back, right? They never come back. And that's one thing I know from my experience, especially when you get into a time like this, where a lot of these names have just been obliterated, okay? When these players have conviction on the other side and want to get long these names, okay, they're not just sweeping calls one morning and that's it. They're going to come in, they're going to gobble up some calls that one day, okay? The stock may pop, sit around for a couple of days, then have a down day, and then they're going to come back and add to that again and continuously come back and add. They look to build a position over the course of weeks, months, sometimes in these names, not in a morning, right? And that's the difference between the pattern of buying out there, the behavior behind the buying that you start to see when the environment and the climate of the overall market changes, right? So there has been no real buying in any of these names. It's been all speculation and short hedging, okay? And like I said to whoever mentioned Carvana earlier, that's not to say Carvana can't bounce. I mean, it's overdue for some sort of bounce at some point, okay? But the problem is you could have made that argument this whole trip down, right? This whole trip down. From here to here, this thing was overdue for a bounce when you consider the beating that this thing has endured, right? And that's one of the most difficult trades in this game, is catching a falling knife for a bear market rally in individual names, right? You got to be Houdini to time these things. Now, options, if any way out there you're looking to try to catch that, options are the way, okay? Because if you're buying stock, you can blow yourself up in these things because a lot of these things are going to zero, whether you like it or not. All right. Or they're going to single digits and they're going to sit there like a hockey stick for months, if not years. All right. So equity is not the way to trade these things. It is via calls. Okay. But you can lose a lot of money doing it if it becomes, something, a habit you start to form in a bear market. Yeah, Lord, it's exactly VRM. There's going to be a million of them. There's going to be a million of them. The carnage at the end of this cycle in a lot of these growth names, I mean, there's going to be a million stocks that all look alike, and I saw it in 2000, right? And it was the same exact thing. And, I'm telling you right now from experience that you think when the bounce comes, it's going to be sizable and they never look back. But more than likely, especially these shit companies, if they don't go to zero, they're doing something like this. Okay. And the range here may be half decent, but to time those entries and exits, you got a lot of faith in your trading skills. I don't. Okay. So it's a really difficult trade. Leave it at that. All right. What we're trying to keep an eye open for here, and there's no signs of it yet, no signs of it yet, is some sort of new leadership, right? Even if we're in a bear market, okay, it's not going to be Carvana or what else? We're seeing some weekly Nikola, right? It's not going to be these names that lead us out of this cycle, okay? The likelihood is it's going to be new names in new subsectors, right? Names that we probably haven't seen action in a long, long time, if ever, okay? And it's going to be under the hood where you have to be paying attention to see it. All right, that's normally how this type of cycle ends. Okay, but right now, okay, what we're going through in the market is something we've never experienced before, because right now you got the Fed who's been on the other side of this thing, right? Normally you're waiting for the Fed to step in, put in a floor, and then, you know, that new bull trend can start, right? Now, you know, I think this guy said it best, and this is something I wanted to talk to you guys about today, right? We didn't have a Fed put, right? Let's start from there. Let's start from there so we don't get too confused, right? What we had going in before inflation started to come about, we had a Fed put. So every time the market or the economy got into trouble, the Fed came in and put a floor. Okay, they rigged the game. Okay, the only threat to rigging that game was inflation. They can do it continuously, over and over again, until there were some real signs of inflation. Okay, then they can't do that anymore. All right, there are consequences. So they've been doing it since 2008. There's been no signs of inflation. They've been battling deflation. Okay, so for the first time ever since the Fed has been rigging the game, they got to deal with inflation. Okay, so what that does, it's taking out that Fed put completely, right? It's taking out that option where the Fed can step in and rig the game now and put in a floor. Okay, and on top of that, what it's done is it's at the same time not only taking out the floor, but has put in a ceiling. Okay, because of inflation, now the Fed has to rig the game in the other direction. Okay, they can't have risk assets run like a banshee here. That's the last thing they need right now. They're drawing liquidity out of the system, right? They're slowing things down, purposely slowing things down, popping bubbles. Okay, so that's why, and you hear, I think Miguel Elliott, probably the first one who said it that way. We went from the Fed put to the Fed selling a call, right? So those of you familiar with options, when you write a call, you're collecting premium, betting that that underlying, that stock or that index has limited upside, right? That's why you write calls. Like Cal, what he did was write calls on some of the energy stocks that he's made money with, okay? Because he's concerned the upside for the time being may be capped, okay? So we went from a Fed putting in a floor. Now, all of a sudden, we went to an environment where the Fed is writing calls and putting a cap on the upside, okay? Now, one of the reasons behind this recent rally here, and you guys probably hear this in the media and everywhere else, because of the Fed tightening, because of the economy and risk assets tightening so aggressively out there off the Fed rhetoric and drawing liquidity out of the system, things are really starting to deteriorate. All right, the fundamentals of the economy, earnings are really starting to deteriorate now, a lot faster than people thought they would. Okay. Now, at the same time, you have a Fed who's battling inflation, but we're already starting to see the economy slow down. Okay, and it's starting to accelerate. So what you had last week and what set off this rally, okay, the Fed doesn't want things to fall apart. They don't want to break something. They don't want something systemic. The soft landing that you guys hear is this. They want this here to continue in the same fashion until inflation rolls over. If they can have their wish, the Fed wants exactly what's been going on right now to continue. Okay? What they're trying to avoid by doing what they're doing right now, they're trying to avoid, and you hear this term, right? The Fed, usually when the Fed slams on the brakes, somebody goes through the windshield, right? Because usually when they purposely try to slow things down, something breaks, right? Something in the credit markets, liquidity locks up. You find out all these body bags of people who were funds that were margin to the hill going bust, right? 2008, late 2018, usually something in systemic breaks, and the Fed can't continue to tighten aggressively because now they risk the whole economic system, right? But at the same time, you get a severe recession because the fundamentals deteriorated so aggressively, right? So they don't want that. So what now a lot of players are thinking may happen is that every time you feel crashy in the markets, right? It felt like right here, things were really gonna roll over, right? You got Target, Walmart, warning, down 30%. It really felt like things were coming unglued, right? Every time we get a sense of that happening, you're gonna have the Fed stroll out their members, right? Brainard, Bostic this particular time, and start to talk less hawkish, right? They're not gonna be as tough, right? You see how they've been. Every rally, what do they say? Oh, we're going after inflation and we're not stopping till inflation's dead, right? Like they don't care about the market anymore. They don't care if the market goes lower. It's not even on their minds, right? Some of the biggest doves out there sound as hawkish as you ever heard them in your lives. Okay, they're purposely doing that. Just by their rhetoric and what they're doing, the market is doing what they want for them by tightening. Okay, so you had all this aggressive hawkish talk out there, talking tough, how they're going to tackle inflation, and stocks, they don't care about how lower they go, right? Now a lot of players are thinking, again, this was the catalyst for this rally in a sense, what got it started, that every time things seem like they're coming unglued, they're going to stroll out those same exact Fed members, and they're going to twist their words a little bit to sound not as tough, right? So what you had Bostic, who a couple weeks ago said, listen, we got to do what we got to do. We're going to raise a half until we see inflation roll over. We got it. Inflation's number one on our mind, right? Then last week he comes out, and because the economy is really starting to deteriorate here and the market's starting to notice it and price it in, now all of a sudden he mentions, well, maybe we'll raise 50 and then come the September meeting, we'll reevaluate. Where that wasn't even on their minds a couple of weeks ago over here, right? They were telling us they didn't have a care in the world, but they want things to slow down. Now they send out Bostic, and he's talking about how they're going to reevaluate come September because things have slowed down significantly. Okay, what happens? The market, the Fed funds rate starts to price that in now, and you've seen that. Instead of expecting higher rates in September, the odds of higher rates, 50 basis points, came down significantly, right? And it gives a little relief for a rally, okay? Again, I don't want to get too technical and really lose everybody here, but it's almost like a chain reaction, right? You guys remember we looked at this chart and I was telling you that really, honestly, right now, nothing else matters in the climate we're in right now. Hold on. Remember this chart? I know members you do. I'm looking to everybody out there now. Okay. Credit spreads. And remember how I told you as credit spreads continue to widen, okay? And that's part of what the Fed's doing right now, okay? This is what the Fed is actually doing right now, okay? as credit spreads widen, it weighs on price action. Okay, same here, right? Starts to widen, the market coincidentally tops out and starts to head lower. Okay, so now because Bostic came out with sounding a little more dovish, right? It opened up the window for a little relief where you get now the credit spreads start to tighten up, very similar to the start of the last bear market rally. Okay, and gives a little bit of a window for a squeeze. Okay, and these squeezes obviously are pretty violent and strong percentage wise. Okay, but so it's a chain reaction, starts with the Fed lingo, then it gets priced into the Fed funds rate, into the markets, credit spreads start to react, risk assets start to rally. Okay, so what some people are saying who are using the terminology of the Fed selling calls into strength, right, are starting to throw around what we may have now. We may not have that Fed put, but we may have the Fed straddle, right? And in simple English, what that means is exactly what I just explained to you, that every time it feels like things are coming unglued in regards to the fundamentals of the economy, okay, you're going to get the Fed to sound more dovish, right? And possibly put in a little bit of a floor. And then every time risk assets rally, you get the other side, right? Where the Fed sounds hawkish and looks to tackle inflation. So it's almost like a seesaw in what the Fed is attempting to do here, okay? And it looks like, right, like, wow, maybe they can be successful. But based off past experience and performance, okay, it may appear that way for the time being, but it usually, right, again, based on just prior instances, usually it ends up breaking something. And what happens is the market, okay, finally realizes that when the Fed sounds more dovish, which they probably are going to end up being, right? If inflation starts to top out and the fundamentals of the economy start to really roll over, okay, the Fed's going to sound dovish. The Fed may even come out blatantly and say, listen, we're pausing. We're not raising rates anymore, period. Okay. And that may lead to a short-term rally, but it's not going to take long for the market to realize, whoa, wait a second. The Fed is pausing rate hikes because the economy is starting to fall off a cliff. You understand? That's not bullish. Okay? That's nowhere near bullish. That's extremely bearish. All right? And what we're going to start to notice is the fundamentals of the economy start to really deteriorate even further. Earnings start to deteriorate even further. You're going to have earnings estimates being already on the NASDAQ there. They're already coming down significantly. They're going to come down where they haven't on the S&P 500 yet. You're going to see that come down significantly. And you're going to see it weigh on the price action because they're going to price that in, right? Because now what they're doing is the market's got to price in higher rates and lower earnings. So they got to price in a lower PE and lower earnings. The lower P and the E have to come down, right? So that's what we're battling here. If I didn't lose anybody yet, that's what we're battling here in this market, right? As far as a backdrop, with really no end in sight until either something breaks or this concludes, right? And how does this end without something breaking? You have the Fed basically stopping exactly what they're doing, right? So they're not raising rates. And here's the other thing, right? That we didn't talk about, and you're not really even hearing much about it because of this rally. The market doesn't even give a shit about higher rates, right? Quantitative tightening, taking liquidity out of the system, has more of an effect on risk assets and prices than rates do. I've been in markets where the market rallies significantly during higher rates. The market's not scared of higher rates because usually, here's the thing, usually higher rates means the economy is doing well, guys. You understand? So earnings are strong. The markets rally into higher rates. Okay, here we don't have that. You understand? You got the Fed that's raising rates, also going to implement QT, right, starting June 1st. So taking out more liquidity out of the system and earnings deteriorating, right? And without the sign, without any sign of that Fed put in sight. So from what I see right now, right? And I mean, this market can change on a dime, right? I'm not even talking about the price action, just the backdrop. But from what's in front of us right now, either something's got to break, and that likely will mean lower prices initially, but we can come to an end of this thing, okay? Or, right, you need lower levels on this market. So that comes without something breaking. So you need SPX 3,500 in where now people could say, all right, you know what? There's no end in sight here, but the overall market has come down enough to price in the deterioration in earnings and the fundamentals to where people see value. They're not, no one's going to come and stick out their neck here. There's no value here. You understand? There's no value here. Multiples haven't come in enough. Earnings haven't even come down yet on the S&P 500. So for me, I just, and it's funny because all these things work hand in hand, right? We complain about there's no real buying out there, right? Like no one's buying these things down 30, 40, 50, 60, 70%. That's why we're starting to see now, okay, why we're not seeing buying, right? Things are starting to make, and I told members this on Sunday, things are starting to make sense. And I know, you know, that's not much to take away from this market, but you guys have heard me come on this webinar going from late last year in where, especially like individual names, I couldn't get myself to buy anything. There's no flow, right? The only thing was in commodities, inflation, that makes sense. But as far as everything else, buying the dip in anything else, it just didn't make sense, right? There was risk everywhere. There was no upside. The risk reward was a disaster. All right. For the first time since then, late last year, things are starting to make sense to me. Like I'm seeing the reasons why we haven't seen buyers in these things. Right. And Ramsey just made a good point, right? And not necessarily even on the VIX, but he's got a good point. It's just as hard to play the bearish side here, okay? Because, and you're probably saying, well, how's that? Let me explain to you. The majority of players who follow this game are seeing the same thing that I'm explaining to you guys. Everybody knows it. That's why nobody owns equities right now. You understand? Nobody's in equities. Institutional positioning is as dire as you will ever see it without them being net short. There is no exposure to equities right now. Hedge funds, institutions, nothing. CTAs, nowhere. All right. So the problem we run into now, right, without getting that capitulation where everybody is concerned about a crash or substantial downside to the point where they're taking action against it, shorting the market, buying puts, right? Throwing in the towel. Until we see that, we're in a spot now where it's sentiment is too washed out for any sort of easy trade on the bearish side, and the bullish side, I just gave it to you, right? So that's why, like Ramsey's making the point, you can't even buy VIX, and he's got a point. You can't buy anything. You can't buy anything. There is risk all over the yard. If you're short, you can't close your eyes for a second because there could be a bear market squeeze at any second that can run you over. And if you feel like you can withhold, sit through the pain of these type of squeezes, more to you. Okay, more to you. But it's an extremely difficult trade. All right. And on the long side, like I was saying, the only real trade, you got intraday action that we talk about a lot, right? Because you have some movement. The only other trade on the long side that's even worth looking at is when we get to these points, okay? And it's really difficult to put on some long exposure to try to catch that bear market rally. That's the only trade out there on the long side where the risk reward is even worth it. Okay, but the issue there is they don't come right away, right? You're sitting there, the market feels crashy, every rally fails, your premium's getting eaten up on the option side. There's no easy trade. There's no easy trade. All right, so that's how difficult the backdrop is right now. Don't let anybody fool you out there that they're making all sorts of money, okay? Even the bears. There's been bears who made money, okay? But recently, even they're pulling their hair out of that, okay? Especially in the last couple of weeks here. Them waiting for that follow through to the downside, hoping for panic, a flush, fund flow capitulation, and it never comes. It never comes. Every time we get to that point, there's a squeeze. All right. So I know it sounds that is a very pessimistic outlook. I get it, right? I admit it. I get thrown in the perma bull category a lot, but I'm also a realist, right? Okay. But the thing to look out here for, and I think the thing that we have to stay open-eyed, open-minded here, in my opinion, is in individual names. Okay, because like I told you, when through 2000, and that's the only comparison that I have to an environment like this. Okay, we reached a point that where the markets were awful. Okay, it was tough to make money on the long side and the downside. A lot of the well-known names were impossible to trade. Okay, but underneath the hood, there were pockets, right? Subsectors that started to get attention, right? Players saw value out there. And like I told you guys last night, right? Medical supplies, I think, was one of the first few sectors coming out of the 2000 blow up, right? And you had these small mid-cap profit revenue, okay? Because they were recession proof to what was going on. You understand? Legitimate small cap value names. And we haven't seen a cycle similar to this, especially some of you new traders, ever, right? So there's going to be a lot of people who miss it because they're not looking out for it. There are going to be a lot of players that continuously are staring at the overall indices, Carvana, and all these names looking for bottoms, and they never come, right? So that's what, in my opinion, that's what I'm doing anyhow. That's what we have to still stay involved and stay on the lookout for. And there, again, there are no signs of it yet. Not that I know of anyway. I haven't seen anything that resembles that type of buying yet. But it will come. It will come. Because what happens too, and this is like the Fed straddle argument we just spoke about, right? If you get into a situation like that for a period of time, every time it feels like the market is going to roll over, it's going to bounce. Every time it looks like the market has some momentum to the upside and may see some follow through, it's going to roll over. You understand? And it's going to drive people insane. Okay? Because you're going to have a bearish backdrop with really nothing going on in the indices. All right. And that's the worst case scenario, because if you're bullish, you want things to come unhinged. You want something to break. All right. Because it's going to be short-term pain, but you get to the destination a lot quicker. Right now, the way things are going, it's hard to even see that destination right now. It's hard to even see it. All right. But the beauty is that things change in this game quick. Everything's on fast forward. You guys are having audio issues? I think that comes and goes sometimes. Story of my life on this. Can you hear me now? Oh, okay, good. Anybody have any questions? I know I hate to get macro because I'm not a macro guy. But a lot of times what you'll see is what I explained to you earlier. Like the signals I look at to ignore the macro, a lot of times I'll get the answers to why those things are happening from the macro eventually, right? So like the example I told you, no buying in a lot of these names that are, have severely been discounted, no real buying. Why is that? And, we're starting to get the reasons why. It's got nothing to do with the price action, or they've only came down 60%, not 70%. Because if players thought the end was near, they would start accumulating positions, But right now, the way things are lined up, we're kind of stuck in a little pickle here of no end in sight type of thing. And there's going to be a ton of head fakes. Like I told you, you don't see that being a big head fake in this market. You could see it now. Tell me if you agree. The Fed talking about pausing rate hikes, right? So now instead of all these analysts coming out and saying, oh, they're going to raise 50 every quarter from now till the year 2090, right? How ridiculous that was, right? So instead of that, you're going to start seeing the market and the Fed funds rate start pricing in no more rate hikes. And initially, that may be taken as a bullish case. Oh shit, the Fed can't be as aggressive. That's good, right? But again, the hidden thing there is the reason why they're not, or they can't be as aggressive, is because things are really starting to fall apart, and the market starts to price that in. So there's a lot of head fakes that are going to attempt to reel us in from time to time and make things, make it even that much more difficult. So that's why, like for example, the flow, that's I think one of the biggest assets to following the sweeper activity, right? If you're seeing all the buying, right, especially when the market's rallying, coming in cheap weeklies, okay, it's screaming at you exactly that. It's not screaming at you, oh, hop on these weeklies and sell them 100% higher. No. It's screaming at you, listen, relax, okay? It's just a short squeeze. Nobody's real behind this. Try to get in the middle of it, make a little bit of money, but don't get greedy. That's what it's telling you, So it's telling you to still chill out. How do I see, the order flow? I mean, there's a million ways to see the order flow. I use Trade Alert to see the order flow, which is CBOE, bought them out. But it's just, watching buyers and sellers come in the options market, not in the equity market. All right, so that's I wanted to start with that before we go into anything else. And listen, as bearish as it sounds, and if Cal's still out there, he can vouch, right? Sometimes you get these bear markets where you get these pockets, right, of sectors, subsectors. Sometimes they could be as big as they were in commodities, where there's alpha. there's money to be made on the long side if you're looking for that in individual names. You know, like an example, okay, the energy names. If you were in the energy names over the last couple of months, right, this market feels anything but bearish to you, right? Even prior to that, the commodity names, this market feels anything but bearish to you, you know? Now there's risk in those groups right now, right? Because that egg has hatched, stocks and the sectors have reacted in a huge positive way. So now there's more risk, right? What's the risk? If the economy is going to slow down significantly, right? And we're talking about the global economy because every country is doing the same thing. If the central banks are trying to slow the global economy down and they do end up taming inflation, there's risk to all those commodity plays that have been pricing in higher inflation, right? And now you're going, you know, you're talking about sectors of the market that prior to this, people had no exposure to. Energy was the most hated sector on the face of the earth. Now you got players that are long these names, right? I mean, we just in the flow, we've been seeing it. Names like Oxy, right, have probably caught 6,000 sweeps in the last 3 months, right? All these names, the positioning is full now, okay? That doesn't mean that they got to get hit hard right this minute, but when there's a reason, right? And that's, again, lower inflation, right? Lower crude oil, whatever it may be. Now there's a catalyst for some selling. Then, you know, you're going to have names like this that have been going up in a straight line for literally months come in. And it doesn't mean that the trend is over. You understand? It doesn't mean the trend has to be over. It just, they have to, there's going to be some profit take. These things got, you know, a little crazy to the upside. So now you have legitimate and, in my opinion, significant risk in these names, right? So now we had no pocket of opportunity out there. We had nothing. Okay. So what we're looking for now is we're looking for eventually something similar to this to come out from the rubble. You know, and again, I have no idea what it may be. We could all guess. We have no clue. All right, I'm just giving you an example. In 2000, after that blow up, it wasn't biotech. It was medical supplies and medical instruments, that type of thing. Okay, it wasn't zero revenue biotech. That went parabolic and had a blow off top into the 2000 top biotech. Stocks went from 3 to 80 in a week. They all crashed and burned. They're no longer around. I'm talking about legitimate, fundamentally sound names that got thrown out with everything else that players started to see value and wanted to own. You know, and it's usually small mid cap. You know, small mid cap. The rest of the shit out there, unfortunately, until the backdrop changes, it's a tough cookie. You know, tough cookie. And we see it in the flow too. It's not like even the spec action in a name like Apple or a name like NVIDIA is all call buying in weeklies. As soon as that thing tops out and has some weakness, they're sweeping puts, right? Just as much as they've been sweeping calls. Because again, they're hedging and they're speculating in type lotto tickets type thing. All right. So that's in the meantime what we need to do. We need to keep our eyes open and look for potential outperformance or leadership out of a different group, different names. Okay. Otherwise, you know, the stuff we've been talking about, right? We got sentiment right now that will likely, again, put a floor for substantial downside from here, right? So in other words, what I'm getting at is every time we sell, usually there's probably going to be some decent bounce back, snapback squeezes, okay, because sentiment is so significantly washed out, right? That's why it pays to pay attention to sentiment. Like I hear a lot of people, oh, sentiment and bear markets don't mean shit. What do you mean they don't mean shit? Okay, if you're shorting into washed out sentiment, you're going to get trampled continuously, right? You got a much better, much smoother trip if you wait till some of that extreme bearish sentiment resolves, even back to neutral, before you start looking to short again. You know, and that's exactly what's been going on, right? People who are extremely bearish, you know, they ignore sentiment because they think it doesn't work, right? Of course, it doesn't work the same way it would in a bull market, right? Because you're in a different environment right now. But at the same time, you know, just like the sell signals in an uptrend, you don't get crashes, you get pauses, you get rinses, right? So now it's the opposite. Now it's the opposite. But you can see here, right? This is from Goldman that we look at on this webinar, right? Here's the average of all their indicators, okay? And you can see a lot of these things have been pinned to the, or even on the verge of pinning to the left. The last resort has been the fund flow. You've had a lot of money come into funds, especially into the beginning of this year, and they haven't really even started coming out yet. As a matter of fact, there were inflows this past week, guys. You know, there were inflows this past week. So you can't even, capitulation doesn't exist without that. You know what I mean? They're trying to wait out the weakness. They're hoping to wait out the weakness. If they capitulate, you're likely going to see the results in the price action. All right. But again, sentiment pretty dire here. So these snapbacks, oh, here's the chart here. What am I even telling you guys? Okay. This is it here. Oh, that's not it. Sorry. This is it. The other blue line. Okay. So you see here, late last year into the beginning of this year, how much money came into the market? Into equities, I should say. And if you think that's normal, look prior. You want to know why the market, besides the Fed rigging the game, why the market had zero pullback and just kept going higher from the COVID lows on? You know, look at the fund flow. Nobody came into the market in a big way at all. And then boop. You know what's funny? And this is what like the guys from Goldman was saying prior to this year. A lot of people were calling for a pullback last year. And, you know, the guys from Goldman who follow us said, listen, there may be a little pullback, but you're not getting a legitimate correction until this happens, because this is all coming in. You understand? The market's not going to pull back in a significant way while this comes in. Was it going to give them better entries? Right? They're going to wait, let all this come in, and then the market will pull back. Yeah, well, Amar, they gave money basically to everybody to go gamble with, right? Go deposit in DraftKings, deposit the other half at Hood, Robinhood, and go have fun. All right? But listen, that the Fed rigged the game. All right? So now they're doing the opposite, guys. Now they're doing the opposite. Okay? It's like they had the faucets on full blast, the water's flushing out. Right? Now they're shutting off the faucet. Okay? All that water, all that liquidity being drained. Right? There was so much money out there. They jarred farts, monkey NFTs going for thousands and thousands of dollars. People didn't even know what to do with the money. That's how much money was out there. Right? How much money they made off these coins and all this other shit. They thought they were entrepreneur geniuses, innovators. Right? They didn't think it had anything to do with the Fed. They thought, oh, look at this. I came up with shitcoin and what a great idea. Come on. So now, we were talking about this in the good times, right? This had to come. It was going to come. It was going to come. And it's here. It's here. So that's where we are. You can't, if you're a bear, you got to be careful. You can't be too bearish, right? You could still tactically play the short side off rallies, just like, some of us are trying to do on the long side off weakness. But you got to be careful. You know what I mean? You got to be careful for these squeezes, exactly what we just had, because they could come out of nowhere when sentiment's just washed out. Right. So this is where the average of sentiment indicators are right now. And, you could see, right? Could definitely get down even more. Right? Considering the situation we're in. This is another thing I would like, is going to be there at the end. Right? You're going to see money trip over itself into safe assets, whatever may be considered safe at the time, right? Terra stablecoin is not an effing safe asset. I don't even know what the freaking thing is. Luna, my bad, whatever name it is, right? That's not money into safe assets. So that's why, even though the market was pulling back and risk assets were in correction, you had actually money going into what's considered risky assets, not safe. So when people shit their pants and don't want to lose their money, right? You see this. Here's late 2018. You see that. That's what you see. So there's more work to do for the market itself to put in a floor without the Fed. It's funny. Hartnett, and you guys know I'm a big Hartnett fan out of Bover, right? What he said, as far as capitulation is concerned, he's looking at one thing, and that's when you start hearing chatter that the Fed is cutting rates. That's what you wait for the bottom. And until then, it's just bear market rallies. Think about that for a second. Right? So legitimate chatter out there that you're hearing on CNBC, Bloomberg about talk about the Fed cutting rates, not pausing raising them and still doing QT, rate cuts. That's where you can have a legitimate bottom, where the risk reward, you know what I mean? Because think about it, he's right in a sense, right? Your downside will be minimal compared to upside potential at that point, right? If we're talking about rate cuts, that means the economy is in shambles, right? Lourdes, that means we're up Schitt's Creek. We're up Schitt's Creek. All right. What else did I want to talk to you guys? I mean, that's basically it as far as what I wanted to share with you guys as far as important. So just quickly to rewind, right? We're looking for potential new names under the hood. Right? We want to try to get our minds focused on that, right? Because at the same time, it will protect us from being lured in and getting into trouble. Oh God, JD, I hope not. He thinks, and a lot of people I follow are saying the same thing. In the vicinity of that 3,500 number is where you'll probably start to hear it. And you can start to look, and even if you're early, the upside is worth it. You understand? Here, how can you make an argument outside of a trade that the upside is worth it, right? We talk about how there's a legitimate cap. So the Fed's going to do everything in their power if the market gets up to here and knock it back down, right? So you kind of cap there at best. And, if the fundamentals of the economy start to deteriorate and you got lower, I mean, that's not a great risk reward, right? Oh, no, that's not a bad run from here, without a doubt. Without a doubt. Without a doubt, that's not a bad run. So, and that's the thing, Amar, where I think, again, as bearish as I am, I'm still I'm still attending the game. You know what I mean? Because if, like, look at this rally here. There was nothing wrong with this. What was wrong with that? Right? If anything was bad about that rally, was just that it was up every single day and you really couldn't take advantage of it as much as you would like. Right? But you do get bear market floors. You do. You understand? Like, for example, if the deterioration out there slows down, like it's accelerated. That's kind of the problem here. Things have been on fast forward, right? So now if the fundamentals out there start to deteriorate at a slower pace, right, and you got a more dovish tilt coming out of the Fed, right? They're not as aggressive as far as raising rates. You can make the argument where you got a little bit of a floor here for the time being, and who knows where the upside is, right? Like I'm more saying here, you got some upside potential here. There's nothing wrong with that. I think the issue which makes this a lot harder, a lot more difficult than the way we're explaining it right now, is the stuff that comes along the way, right? What happens if the fundamentals do continue to deteriorate at an accelerated pace, right? What happens if quantitative tightening, which we have no idea how the market's going to react to that. We have no clue how the market's going to react to that. Okay. We have a clue. Late 2018. That's our only clue, right? So if you want to go off prior experience of when QT had an effect on the market, okay, this is how the market handled that. What is this, a diamond? Look at this shit. Where'd that come from? Right? So here, that's how the market handled QT then. And then the Fed had to hit the brakes here because things were ready to blow up. This is new. You know what I mean? Nobody knows. We all have maybe gut feelings and hunches, but nobody knows. So that's what makes this tough, Amar. You know what I mean? That's what makes it tough, right? Especially when you already get a little bit of a lift. You're holding because there might be some more upside, but those factors come into play and knock you back down again. Right? And you got no flow coming out of the support. There's no buyers to be found anywhere. Right? Everybody crawls up into their little hole and disappears. It's just, again, listen, plain and simple, okay? And I think a lot of newer traders don't realize this. And it's very simple. This is just not the backdrop or the environment to get aggressive on the long side. You know what I mean? In my opinion, it's not the backdrop or the environment if you're a newer trader to get aggressive, period. All right? If you're a newer trader to this game and never experienced something like this, my advice, sit back, play nice and small, nice and easy, enjoy the experience, take it for what it's worth, experience. You understand? Learn some shit, but make sure you have some bullets to fire when it's all said and done. That's your motive. That's your goal. Okay? You're not going to beat this market, especially if you're young in the game. Okay? The best players on the face of the earth can't beat this market right now. So it's almost like you're arrogant and cocky, and the market gods don't like that. Yeah, and Matt, listen, some people like myself. I'm not scared to admit it. We like the market, we enjoy the market that much to where instead of betting a ball game, you rather bet on some calls. That's fine. But like Matt said, no, understand what you're doing here, right? That's not being aggressive. That's staying involved, having a little fun and taking the experience in. Right, exactly. Don't get addicted. Exactly. But it's that simple, it's that simple. And sometimes we got to remind ourselves of that. We went through a period of time where it was the complete opposite, right? There were times in this rally where we bought anything and by accident we were making money, especially early on in this move. You know what I mean? Early on in this move, we had SPACs more than doubling. Now I'm not even talking about the calls, the actual equity more than doubling in an hour intraday. That doesn't last forever. You know what I mean? This was even too long, if anything. This almost always comes, right? So you got to navigate through this, get through this, have some bullets to fire, because when it's over, and inevitably it's going to be over. Some last longer than others, but it's going to be over. You got some money to have a shot at actually making money. You know what I mean? Real money. Bring it back. Yeah, we all want it back. But, you need this. It got out of control. It got out of control, right? You hear me joke about it all the time, but it was out of control. You had people off, especially outside of equities, off these coins. You had people printing money out there at ridiculous rates, becoming millionaires, doing nothing, buying some coin and holding on to it. You know what I mean? They had no clue what the hell they were doing. What, they drew a picture of a monkey and put some copyright on it? Like, come on, guys, right? Jarring a fart and selling it online. It got out of effing control. They have to do this. You understand? Otherwise, you're going to have every jabroni out there at elite status in another 6 months. You're going to have Dogecoin jabronis part of the elite. You can't. They always do this. 2000 was, here's the thing though, right? Everybody asked me that question. This hasn't been as nuts as 2000 on the equity side. See, in 2000, it was all stocks and tech. That's it. You understand? You didn't have Bitcoin and all this shit. You didn't have that technology. But on the equity side, Praveen, the late 90s, no comparison what we went through, even SPACs, to the late 90s. I told you, take what SPACs did, okay, but times that by 10. Think about the hottest SPAC you can think of. Okay, what was the hottest SPAC you could think of? Give me one SPAC that was, which one? Give me one of them. Which one's the hottest? CCIV, I remember. Okay, so that was Lucid? Right. Definitely, okay? So look, okay, let's take a Lucid, okay? In 99, okay, this happened. You had a move like this. Well, let's even take it from here. Well, this makes sense though. You had IPO, they came public, right? You had a big explosion here. You had a pullback to here, stopped, and then another move higher, okay? Then you think it's over, right? Another pullback, finds buyers, another trip to new highs, now announces a 2-for-1 stock split. Okay, you walk in, the stock's up 80 the next morning on stock split news. Okay, stock goes to 200, splits 2-for-1. Okay, goes back to 200, announces another stock split. There were stocks that split 4 or 5 times. You think I'm lying? Okay, they ran to 200 off the stock split news, split 2-for-1. So now they're at 100, went back over 200 again and split again. So you had, I remember, because like one of my good friends, his mother was like really invested. She got buried alive. She lost everything. She was on the street corner with a cup when it was all said and done. Okay. She you thought like a crackhead. That's all she did was watch the market. She quit her job. She locked herself in the house. She traded tech internet stocks. That's it. Okay. She literally was printing money. She would buy 500 shares of a stock. It would split 2-for-1. She would have 1,000. Then it would go split 2-for-1 again. She would have 2,000. You understand? Crazy money. Crazy money. All right. And you know how that game ended. Just like a lot of these SPAC names are ending. But think about the move again, times 10 to the upside. All right. So now you had people who started with, $100,000 account, went to $1 million to zero. Yeah. But here's the thing. Yeah. It's easy like for us to say, oh, sell, lock in those profits. If you sold, you felt like the biggest jackass on the face of the earth. You felt like a sucker because every time they corrected, people sold, got shaken out, and then you missed on a move and 2 more splits. You understand? So every time you were a seller, it cost you big money, huge money, huge money. Huge money. And that's why at the end, you're probably saying, how come nobody sold on the way down after it blew up? No, none of these people thought it was the end game. People thought they were coming down, go to bottom, and then go back and split again. They already did it 4 or 5 times. Crazier than cloud stocks. The cloud stocks didn't split. Did any of them split? A lot crazier than the cloud stocks. I'm telling you, the only thing that, if you add Bitcoins and NFTs, all that shit to the mix, then you could say it's equivalent. But you're talking about even, like I think Santoli on CNBC made the point. You had Microsoft trading at like 80 times earnings at the peak. Ridiculous. You had blue chip names that were trading at 80 PEs. And bulls would make an argument for it. Okay. You had analysts like you have Tom Lee now, right? Everybody likes to pick on him because he's a perma bull. You had guys like Henry Blodgett would come out and put has a buy recommendation on Amazon, right? And he just raised his target the day before, come out literally the next day and say, we reiterate our buy and we double our target price the next day. Henry Blodgett, you remember him? That's all he did. That's all he did. People loved him because he'd come out with raising his target and the stock would be up 100. I think he works for some magazine now or something, Matt. Yeah, Business Insider, that's it. You had guys, forget, there was the one guy, I forgot his name. He was a legitimate analyst. He covered WorldCom. He was getting money under the table from WorldCom to put buy recommendations and raise his target price. He was getting paid from WorldCom to do it. You had crazy shit back then, crazy. But again, like you see, like you had like you were driving a taxi, and the guy driving the taxi the conversation every time would be like, "Oh, you trade stocks? You trade?" He couldn't even speak the language. "Oh, you trade internet stocks? Yeah, I'm going to quit my job. I made a couple 100,000. Everybody. I'd go down to the cafeteria of my building, the people serving the food, everybody. Very similar to crypto. Now I think everybody talks about crypto a lot, Everybody talks about crypto. So yeah, if you combine it, similar, but 99 was nuts, man. It was nuts. And the way it ended, okay, the NASDAQ topped out, the internet names topped out, they started to get shaky, right? So you thought everything was all done out of nowhere. Biotechs, right? Like I was telling you guys, had a blow off top, okay, out of nowhere. in 2000, March of 2000. I told you I was sitting right next to a broker. I was a broker at the time who had a book full of clients who were doctors, surgeons. They all had big positions in biotech names that were trading at 70 cents, $2, $3. They did nothing during the internet boom. They sat there, they were illiquid. They hardly traded volume. In literally a 2-week span, those stocks went from 60 cents to $50. Okay? That the blow off top in biotech. Moves insane. I've never seen in a short amount of time a move like that in a sector. Never. His biggest position, I told you guys the story, was a company Nerex. Okay, it's not even around anymore. Who knows what they did, right? His average cost was like $3.75. The stock went to 75 in 2 days. Okay, he built a position, ton of stock. He owned at $3.75 in 2 days and went to 75 and sat there as liquid as the sea. You could dump every share you wanted. He got made in 2 weeks over that biotech move. Boom. From a nobody to mega. People used to make fun of him. What are you doing? CMGI's up 100 points. You're in some biotech that's trading at $3 with 50,000 shares traded? What are you, drunk? People used to abuse him, make fun of him. But that's how crazy 99 was. Yeah, biotech had a nice run in 2014. A lot of people thought it was going to be something similar to that. But obviously it didn't get that crazy. So yeah, it's, again, I tell you these stories because it happens in different ways, in different groups, different reasons, but the fear, greed is around at all times, guys, at all times. Yeah, right. They don't want to take profit because they don't want to pay taxes, but that's when you're getting toppy, though, right? When you're making money and you think that money is going to be around and you don't want to pay taxes on it now, right? Even though you're going to pay taxes on it later. Yeah, that's all part of it, man. It's all part of it. So, and plus, these coins, there's no regulation. You know what I mean? Then you had, not that it did anything, but you had the SEC and you had some oversight. These coins, half the shit you guys know, I never heard of these things. Stable coins? It's almost oxymoronic, isn't it? How could it be a stable coin? That doesn't make sense. Oh, I can't. Listen, Matt, I made a promise. Okay. If this shit survives this bear market, if at the end of this bear market, all this crypto shit, all this stuff you guys do is still around, okay, I make a promise I will dive in and learn more. I promise. All right. Otherwise, why would I do it if I feel like I might be spinning my wheels? Yeah, without a doubt. If this shit's legit and it's gonna be around, of course I want to learn more. But I'm still suspect. I really am. I'm still suspect. Extremely suspect. I just, I've been through, call me a boomer all you want. I've heard it all. I've been through it all. I've seen, again, you fail to realize there was nothing more real than the internet. Okay. It's nothing more real than the internet, right? Probably the biggest technological breakthrough in our lifetime. Things evaporated after 2000. All right. Amazon, which you would probably put, right? E-commerce, the blue chip of blue chips, was trading as a pink sheet penny stock when it all came tumbling down. Amazon, right? AOL, blue chipper, right? That thing didn't get, if they didn't force that merger on, that thing is poof, a fart in the wind. Yahoo! Oh, Yahoo! Okay, point being, doesn't matter. I'm not saying that the technology itself is not real. I'm sure it'll be the technology, Bitcoin or blockchain, whatever the fucking technology actually is. I'm sure it's going to have an influence in the future. I'm not smart enough to say it's not. But I'm telling you right now, all the shit you guys are playing on a day-to-day basis, like the fart in the jar. It's like that jar opens up and you get a fart up in the wind. That's what you're gonna have. Because you know why? There's where the fundamental, like there's no there there. There's no there. When liquidity is gone, it's nothing but, you know what I mean? A digital coin. The metaverse, I'm excited to see that. I might be dead by then. Yeah, what are you talking about? 20 years from now, 15 years from now? Right? That's far away, no? The metaverse? I heard people buying real estate on the metaverse. Somebody's got to sit down and explain that to me. You think I'll be alive in the metaverse? Nah, well, I might be old and at the racetrack every day at that point. Jar farts. But that's what people think, like I'm a Bitcoin bash. I'm nowhere near smart enough to talk about that technology in a good or bad way. But when the money runs dry, that's what people don't realize. Las Vegas Sands, right? Matt, think of degenerate gamblers. Gamblers, they never go away. Even in recessions, they even gamble more. Why? Because they want to try to hit it big because they're in such dire straits, right? Degenerate gamblers are always going to be around. We were this close, literally 24 hours away from Las Vegas Sands going poof. When the liquidity dries up, nothing's safe coming out of a bubble. Nothing. So let me ask you a question, and not to have this conversation linger, but like for Bitcoin, right? If when it's all said and done, like Bitcoin and Ethereum are the only things alive and trading, but obviously at much lower levels, is that like a win for all you coin aficionados and fans? Is that a win? So, okay, so it's typical for all the other coins, all that other shit to go poof. So then what are we talking about? What do I need to dive into and learn, Matt? What are we talking about? What do I want to learn? What do I need to learn, I should say? Understanding what am I doing? I'm building some blockchain fucking exchange here. You know what I mean? I'm talking about like trading those vehicles. I'm not, you guys trade them now. Hopefully you guys, I don't know, can you even short them? I know Lucci finds a way to short them. But I'm kind of, so you understand who you're talking to here? I'm kind of on the same page as Charlie Munger, not too far away. All right? Let's leave it at that. You're trying to talk Charlie Munger here into trading Bitcoins. Yeah, well, he's got one foot in the grave and still in the game, Matt. He's no dummy. He's no dummy. It's another guy, all the apes and the Bitcoin guys were bashing. What's his face? Who called his bubble to a T. You guys know who I'm talking about. They were all bashing him, how old he is, and shit. I remember I posted a link to his video even in the room, and people were abusing him. Who was the guy who called? There was one guy who called this whole bubble, says ready to blow. It's the biggest bubble we ever seen. No, older guy. No, not Soros. Not, I wouldn't say Soros level, but he's been around. You know him if I say the name. No, older guy, older. Not Ray Dalio. Similar to Ray Dalio, older. Dalio didn't call this bubble. Like, he literally called his bubble. The hell's his name? I'll think of his name. I'll tweet it out. You guys know him. Grantham, thank you. Italian chef got him. Jeremy Grantham. And that's what he does. He called quite a few bubbles. He's been early, so wrong on a few of them, but he's nailed a few bubbles. But, you know, you listen to his, yeah, well, there's a link. I was going to say there's an interview on, yeah, Lourdes, that's the guy who said 50% drop, you know, just based off how some of these things prior have ended. He's done a few interviews on Bloomberg. If you want to watch a scary movie, pop that in. Yeah, no, what he said, Siri, is exactly what we just said, that you can't, it's not like you could just get short and make money. It's right. It's not that easy. It's not that easy. So what he is he's short the bubble stuff, long the value stuff. You understand? Like, he's the first to admit it. You can't just go and just come in and start shorting everything and think, well, yeah, it's gonna be a smooth trip and you make money. You know, talk to guys talking about like a Michael Burry, again, another guy who's been bared up. You know, even the 2008 one, which you caught. It's not easy, man. You guys read too many stories. You hear too many people on Twitter. Even if you get it right, to make money is not easy. You understand? Some of I told you, all you guys, especially members, there was an interview with what's his face, the one guy who's the biggest, you know, the most reputable short guy on the street right now, Chanos. There was an interview I heard with him back in the day when they were talking about his game and how he manages his book and all. You would never, after hearing that interview, you would never short a stock ever again in your life. And this is coming from a guy that's his niche. You know what I mean? How when he starts a short position, first of all, he's got to be fully hedged. And it's not, oh, I got a bear case, I'm going to just get short this one shot. He shorts, he covers. He shorts, he covers. He shorts, he covers. Like, he'll short and cover 10 different times before he ends up net short something. You know, all the riffraff on like FinTwit, they think, oh yeah, I'm a bear. I'm just going to short the S&P and I'm going to sit and everything is going to crack and crumble around me and I'm going to make money. So to that point, Grantham, he's as bearish as can be with a reputation for calling bubbles. And he's pair trading his way through. Fed cuts rates. Yeah. I mean, honestly, Chef, it's if you want to like really dumb it down, it's pretty much that simple. And it doesn't mean that you know, immediately once the Fed starts cutting rates, the market just turns around and runs higher. Like, you know, in 2008, they were cutting. It depends on the situation. If things are that bad, you know, there's a lot of pain. But when the Fed starts rigging the game again, you know, that's when, again, the Fed starts rigging the game in the other direction. The problem, Chef, with what's going on now, and not many people can tell you this, there are so many ways for this to evolve along the way. You understand that it's almost impossible to come to one conclusion and wait on that. You understand? This is something, it's new. Nobody has any experience with this. You know what I mean? The Fed has never needed to do this. Like, this was everyone's biggest worry and complaint when the Fed started cutting rates back in 2008, 2009. And it never came to fruition, right? The concern never legitimately happened until now. Right? Inflation was never a problem until now. So, listen, what? I mean, the odds probably aren't solid, but I mean, can we just throw it out completely that there's the possibility of a softish landing out of this? It's maybe not probable, but it's possible. You know what I mean? Like, there's so many things that are going to happen along the way that it's impossible to forecast. That's, impossible for a legitimate forecast. And that's why, I was being dead straight with you guys. Like, the only way that I would even try to ignore everything that we spoke about on these webinars and get long is if, Sharpies got long, right? Because my thesis behind that is that maybe somebody who knows a lot more than me sees something that I can't see. So that's the only thing that would overpower what we're seeing right now for me. Because think about it, there really is nothing else that I see. There's no flow, there's no nothing, Again, lower, I honestly, let's talk timeframes here, right? I, without a doubt, see the potential for the possibility for a floor to be put in short-term temporarily, okay? Based off how bearish sentiment has been here, right? So in other words, I think the downside is going to be really difficult. I think there's going to be a good amount of bear squeezes, right? So I think that we can get, I'll give you guys an example. This is why it's so such a tough question to answer. Look, watch. Okay, this is Armageddon, right? If you want to compare it to the worst time that you can compare it to, you go back to Armageddon. Okay, and I'm not saying this is Armageddon yet. Okay, but I'm saying that's worst case scenario, right? So here's Armageddon, right? Here's the start of Armageddon. Okay, you get this. Okay, now you get sentiment here. Everybody's so bearish and nobody has any exposure to equities, where sometimes you get a little floor put in, here's your floor. So what do you get? You get a bear market rally, right? You see that? Cut and dry. Bear market rally for a good, what do we say, 2 months? A little over 2 months? So that's what I'm kind of explaining, just so you guys understand what I'm talking about, right? So this is possible where we're at right now, okay? But the difference is, all right, this is not the start of a new bull trend, okay? It rolls over and makes another new low, all right? You see the downtrend's intact, everything, all right? This is a bear market. Nobody even knows at this point yet if this is Armageddon. This is just a bear market, okay? So this is the worst case scenario. Then here, again, you reach a point where you get a little floor. Again, it doesn't look like much, but if I do this, it'll look a lot better. Watch. Okay. So here, right, and you see even the green there, right? Pretty oversold, sentiment washed out. You get another bottom. Another low, I should say. Okay. That's for a month. Let's call it a month. A little less than the other one. rolls over, new lows. Okay, now this is where shit started to get dicey, and people thought the global economy as we know it was going to go poof, right? Like I'm talking about coins going poof. People thought the global financial system as we know it was going to go poof back then. All right. Then this is where everything came unhinged. All right. And this is where you get capitulation, right? This is where something breaks. Lehman, kaput, right? Lehman goes under, the whole 9 yards. Right? And that leads to capitulation. And there's your bottom in 2009. So you see along the way, right? Let's say we're here. Again, I'm just example. You get a little bear market rally, right? Then you get a new low, and another bear market rally. Then this is where shit started to hit the fan. So the possibility, what I'm getting at, and the reason I'm showing you this, we could be at a point like this, where there's some relief. All right. And that's what I was telling you. Like, for example, if the fundamentals of the economy, right, as we talked about, they started to deteriorate, right? You really started to see things get ugly, right? Earnings were holding up, margins were holding up. And then you had Walmart and Target, right, shit the bed. Okay. Things were really starting to look a little dicey. If that slows down, you know what I mean? You get something like this, right? If the fundamentals, right, if the wheels come off, then you're going to get this, and then you're going to get the Fed to pivot. And then there's the Fed put. Yeah, and the market has been doing the work for it, Cal. You know what I mean? The market has been doing all the work for the Fed. The Fed didn't do anything yet. But this QT could be a real issue. I honestly, if you told me this last year that they were going to raise rates and then QT was going to come to the mix like this, I would have told you they would have never even got to the QT. The market would have shit the bed and throw a tantrum and been over with. Oh, I got you. Yeah, so this at that time, I told you guys the environment was so scary. Like this was a blur to me. Like for me to think back then, like I wasn't trading anything. I was in my bunker. Like I told you guys, I was liquidating bank accounts because I was worried about my money in banks not being there the next day. So forget about trading. So like I don't even remember what went on here, Like I have no clear recollection. People were worrying what was going under next. AIG was bound to go under. I told you Las Vegas Sands couldn't borrow money. There was no liquidity, no lending. That was ready to go under. It was the craziest thing. Like major companies, exactly every day, was next. And I remember, like once Lehman, well, first it was like Bear Stearns. Once Bear Stearns that happened, then I remember we were looking at the puts, and they were buying puts so far out of the money, aggressively loading up on Armageddon puts, and they were just going after the next bank, and that would feed into itself, right? The put buying would alert the shorts would start shorting sellers, and it just snowballed because there was no buyers. There was not a buyer to be found anywhere. Who was buying into this? So the only time that buyers showed up was at the scariest time, and that's when the Fed wrote a white paper basically stating that we're rigging the game. We're not letting anybody else go under. we're buying up everything, and that's it. Case closed. Free markets are done as you know them. Don't forget, they let Lehman go under. You understand? They didn't want to get involved. They were going to let free markets work their magic. But then when it started to spread into other things, that's when like Hank Paulson was like, oh boy, Bernanke, we can't talk tough anymore. This is it. We're not going to have anything left. And then that was the start of the Fed put. And then every time, that was hysterical. Every time there was a little hiccup, that Fed put was there. You know what I mean? Because they didn't have to worry about inflation ever. Everybody back then was talking about, oh, inflation, you can't do this, inflation. And never showed up. Deflationary forces all the whole entire way for a decade. So every time there was this, you had that Fed put, So again, different than now, but now similar to where the Fed's got to battle inflation and they're talking a tough game. But see, the thing is they're talking a tough game. Powell's not dumb. He knows as soon as there are any signs of something systemic, the possibility of something systemic, he'll flip so quick you won't even see it. Yeah, the Fed put, like you sell a put, all right, in the options where when you sell a put, you almost like you put a floor underneath the underlying, right? So if I sell a put in Apple, I'm willing to buy at a lower price. If Apple comes down, I'm a buyer. So the Fed put in this example is basically the Fed's a buyer. So if things get dicey from here, the Fed is going to come in and rig the game. You understand? So it kind of put a floor underneath. You understand? So that's kind of like when you hear people talk, right? Like right here, right? They say you can't get aggressive here at 4,100 because we don't know where that Fed put is right now. It's nowhere in sight. Like some people think 3,000, right? Some people think 3,500. So the closer we get to those levels, then you're going to see people start to place bets that the Fed put is there. You understand? We got 200 points to the downside, but we got legitimate upside. So that's how the Fed pivot starts to lure in buyers. Right now, you got the Fed doing the opposite, right? Every time you get a rally, like think about this rally here, okay? This rally here. And you guys know I was long buying SPY, right? This rally, not only did it stop, okay, which a lot of us thought there'd be a breather and maybe hang around here. The Fed rolled out every dove, right? Brainhart, never a hawkish tone out of the mouth, did a total 180, right? Came out. That's what killed the market here. And she was talking about, oh, not only are we going to raise rates, we got to get aggressive with QT. And everybody was like, whoa, what? Did Brainard just say that? Talking about QT in the mix, right? People know QT wasn't even in the mix. So that's why this, just did an about face, and not only about face, just they priced it lower. Okay, and it also woke up people to saying, all right, look, not only don't we have that Fed put, but every time the market shows a little bit of strength to the upside, right? Risk assets start to appreciate. You're going to have the Fed talk the market down. So who wants to buy that now, right? After that, that's what happens. Meaningful, exactly, right? So you see that tone? That's the tone right there for me, right? But mark my words, that can turn on a dime when it needs to. On a dime, right? I'll just give you this point and then we'll wrap it up because I'm running out of saliva. in late 2018, okay, right here, the Fed, okay, said we're going to raise rates. Okay, the market was cool. They were already raising rates. The market had no problem with them raising rates. What the market got pissed off about here is Powell said, and the quantitative tightening, don't worry about it. It's going to be on autopilot. Okay, it'll be in the background on autopilot. You guys won't even know what's going on. And the market said, oh, we're not going to know what's going on. So the market, right? The market says, so you're going to draw liquidity on autopilot? Well, here's what we think of that. Right? And instantly the market was pricing in liquidity being drawn out on autopilot. So you had credit spreads widen out. You understand? You had liquidity dry up in the bond and credit markets all over the place. The market was pricing in autopilot. It was the worst thing Powell could do. And so think about that, right? Powell said he's going to raise rates, continue to raise rates, and QT was going to be on autopilot. Okay, here, by this point here, Powell, you wouldn't have recognized him. Okay, they were calling him the next, what's his face? The other guy who had the Fed chief who had to raise rates, that everybody, Volcker. They were calling him the next, oh, we got Volcker 2.0. That's what they were calling Powell, all kidding aside here. By this point here, they called him Bernanke Jr. Okay, not only were they not going to raise rates, they were cutting rates. And not only were they not doing any more QT, they were going to implement QE. Okay? So think about that change in this period of time here. That's not a lot of time. So Powell can talk tough all he wants. He knows that if shit hits the fan, he's got to change. He's got to react. But you know, by that point, there's going to be a lot of damage done. You know what I mean? Maybe not even so much equities. There'll be a lot of damage done in a lot of different bubbly parts of the market. Like up to here. And you ask Powell, you ask anybody how the market is going to handle quantitative tightening, and they'll be the first to tell you, we have no fucking clue. We have no clue. They have no clue. Like I said, we're going to take it day by day and see what happens. They have no clue how the market's going to react. Crazy, right? Yeah, they don't know. You know what I mean? They have no idea. They're being honest. They have no idea. You know, they have no idea. What they did is they try to get it out so the market could price it in. It's not unexpected, kind of like autopilot came unexpected. It shocked the market. So, you know, they want it out there, but they really have no idea. So how are we going to sit and pretend we have any idea? You know, we have no idea. We have no idea. Right? So exactly what we spoke about. Take it easy, keep the eyes open, play a little, just stay entertained, stay involved, because even though sometimes it feels like it's a long drawn out process, it could come to an end quickly if the right things happen, you know? No bunker spy puts. No, I couldn't buy puts here anyway with sentiment as washed out as it is. I couldn't do it. I'm itching, all kidding aside, as bearish as I am, I'm itching to get long something, okay? I just can't. I would love to add a long somewhere, you know, with time, something. I just, there's no signs out there to give me a kick in the ass. No, I can't. Where am I? You know what I mean? I'm not going to fight the signal. No, Sharpie, you know, maybe we'll get that at some point, and I can add some SPY or some shit, but there's no flow. I'm not just gonna do it for shits and giggles for no reason. Because look, we've been complaining about the flow for it feels like forever, and there's been a reason. So you gotta stay patient. You're gonna have to learn patience in this game at some point, right? Not to sound corny, you're gonna have to learn patience at some point. So it's just not worth it. It's not worth it. Yeah, Cal, everything's tough right now. Everything's tough. But things will loosen up, right? Even if I'm not saying we go to full-fledged bull, but there'll be some pockets out there we can at least talk about, maybe roll the dice here and there. Right now, there's just nothing. Zen, I haven't looked at Zen. I thought, wait, Zen, didn't Zen get bought out? Or am I thinking about something else? Zen, didn't they catch a bid? Oh, they pulled out of the deal, Zen? Oh, I haven't paid attention. I thought it caught a bid, Zen. Wait, what was the name that caught a bid? Didn't Zen catch a bid? No? What was the name that caught a bid? Oh, they declined it? Oh, I didn't know that. Yeah, I could have sworn Zen caught a bid. There was news that Zen, there was a price for Zen and the stock popped that morning. I know for a fact. I don't remember what happened after that. They declined it? Wow. Right, Jana. Yeah. Yeah, deals are tough too now, as things get worse. There's no buyouts. People tuck the money away, Exactly. Tough cookies. Something happened, Praveen, here with Zen. I know for a fact it caught a bid because you guys told me that morning and the stock was up here. Had to be, unless I'm thinking of another name, but it had to be. There had to be news right here. It gapped up too here. Yeah, Zen has had Jana for a while. That's what the rally was about from here. See? Look. But I'm saying here, I remember when we last spoke about Zen, I remember we looked at it, it had a little pop gap up, and there was news of a bid. But I haven't followed it since then. But yeah, anyway, the bid's not going to be easy to get to find either in this market. That's for sure. You could count on two fingers. July, you're talking about rolled out, or we haven't seen anything new there for a bit. That's why I lost track of it. See if Janner maybe comes in. It's too tough for any of this shit. You got to trade them all now. You can't sit in anything unless you really want to go through some pain. You know what I mean? You can't sit. It doesn't matter. Stories mean nothing. You know what I mean? Stories mean nothing. Even a buyout story, unless they get bought out, the story means nothing. The story means nothing. It's just tough. There's no easy money, guys. There's no easy money. Yeah, this is a bear market. Normal, totally normal. I promise you. Totally normal. Yeah, look at Twitter, right? What happened there? It's tough. Everyone thought Twitter was a lock with Musk. What happened to that? I haven't even looked at that stock. Yeah, look at this. There's no stories. Forget it right now. You know what I mean? You're reading fundamentals, or they sign a contract with Ford or any of that shit. Take it and flush it down the toilet bowl. Sell it. How about, you know what the trade is? You sell on any of that news. Exactly. Sell the pop off any news like that. That's the trade. How crazy is that? Guys, sit tight, be patient, or be extremely nimble. Those are two options you have. There's no other options. There's not some golden goose hidden that you're going to find somewhere that's spitting out winners in this game right now. Doesn't exist. All right? You either got to be extremely, extremely tactical and try to trade the momentum that has nothing to do with the company, the fundamentals, the story, nothing. You're just looking to get in the middle of the momentum, make a little money and get out, right? As quick as possible. If you don't enjoy doing that, sit tight or make donations. That's all. Consider it like you're making a donation to the market gods. All right, guys. I'm wrapping it up. Yep. Always a pleasure, guys. I appreciate you guys stopping by after a long day of these markets. All right. Good luck the rest of the week. And let's see how the market gods handle QT. Should be interesting. Have a good night, everybody.